Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about GBPUSD. Now, why do I want to speak about GBPUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis, starting from a technical point of view. We will then go and see what we have when it comes to the commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. So the biggest speculators and the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment we are testing a short-term resistance level. In fact, we can see how from here the market had started this move to the downside, and at the moment we're testing this exact same monthly resistance area from which we do expect the market to provide a short-term rejection to the downside. So here in the monthly, everything seems quite bearish. We do expect a short-term rejection to the downside before then a potential continuation to the upside. So on the monthly, we have resistance. Going down on the weekly time frame, what do we see? Now here in the weekly time frame, we can see how at the moment we are also here testing strong supply. In fact, from here the market had started all this move to the downside, and at the moment we're testing this exact same supply zone from which we do expect the market to provide a potential rejection to the downside. So also here in the weekly, everything seems quite bearish and we do expect a rejection to the downside. Now, if we look even closer, what we can notice is that we have the possibility here of creating an inverted head and shoulders. In fact, we have moved to the downside, correction, lower low and equal high. Now, in general, when you have an impulse correction, lower low and equal high, you then expect a move to the downside before the continuation to the upside, basically for the market to actually create this inverted head and shoulders. So what we expect here is a short-term correction to this level before then seeing a continuation to the upside. So also here in the weekly, as we have already seen on the monthly, we expect a rejection of the supply that we are currently testing. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what do we have? Now here in the daily time frame, we can see that at the moment the market has just created this overextended W formation. Now in general, after the creation of an overextended W formation, you want to see the market provide a move to the downside. Specifically, you would like to see the market provide a move to the downside to go and retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. So overall, we would like to see the market reach this 0.382 here of the Fibonacci taken on this daily impulse before then starting the continuation to the upside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately on the pound, hedge funds have been decreasing their net positions. In fact, we went from having a positive 32K net positioning down to having minus 3.4K net positions, which means that we went from having more longs than shorts from an institutional perspective on the pound to now having more shorts than longs, with 47K shorts and 44K longs. So the pound is getting quite bearish and we can expect the market to provide a potential rejection to the downside. So how we will be approaching this potential shorting opportunity with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames when it comes to the technical aspect of the market. However, when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from an intraday perspective, so 4 hour and lower, during this move to the upside, and we will be waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding GBPUSD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.